now. And the first commodity we are going to be looking at this morning is the US oil. So before we go into what our expectations will be like for today, let's quickly run through what our expectation was as at yesterday, what we were looking at. What we went was because of the simple setup we were able to identify at the beginning of the week, as we saw how price action was caught initially within this channel with the resistance point sitting at the $81.80 level and the support level of the channel sitting around the $81.20 area. And you know that from a technical standpoint, whenever we have a channel like this, all we need to do is to remain patient and wait out for either a breakout or breakdown of the channel to give us a trading opportunity. And what we saw later on yesterday was quite interesting here, as we saw the breakout of the $81.80 level, giving us an opportunity to buy, and that also led to the breakout of the $82 level here, giving us another opportunity to add more position to our existing trade. And in fact, after the triggering of the second position, price action continued to fall within a consolidation phase here, as we continue to see some buy pressure around the $82 level and some selling pressure resume around the $82.60 level to give us a sign that there is an indecision at this point. And I do hope that those who took advantage of this opportunity yesterday moved your stop loss accordingly, as price action took us out of that position at break even. As you can see, price dropped below the structure at below the $82 level to culminate at the $81.50 level. Now, one thing that happened here on the US oil yesterday was the fact that as soon as price tested the $81.50 level here, we started seeing some buy pressure coming in from that structure. So during the later part of the New York session yesterday, we saw some buy pressure here, and then during the early hours of today, we also saw another buy pressure at this point. So if we take into consideration this engulfing candle, then definitely we want to be seeing price action break down this $81.50 level to give us a bearish signal that sellers are really strong in this market. And a couple of hours ago, we saw the breakdown of that structure, which I actually took advantage of here, and I shared this on my public platform, where I will be looking forward to a retest of the structure to incite another wave of bearish momentum. So going into the New York session today, we have two structures we shall be using to guide trading activities for today. And if we look at what we have here since the beginning of the week, though we have an initial bullish momentum that started the week at the $81.20 level here, but one thing we observed is that as soon as price tested the $82.60 level, we saw sharp rejection of that structure multiple times to give us a clue that sellers are beginning to come in gradually in this market. And if we look at the structure here, and this one here, you can see we have a lower high, and if we connect the series of lower highs together here, we have a bearish trend line to guide our trading activities for today. So in that regard, I will be using this trend line here to guide our selling momentum going forward, as we have identified this current structure. Now, in addition to this bearish trend line is the $81.50 level, which I laid emphasis on a couple of minutes ago, emphasizing how that level had been holding buy pressure for some time between the later part of the New York session yesterday and during the early hours of today. You can see we have been witnessing buy pressure there before the breakdown of the structure finally happened an hour ago. Now, with the situation we have here, we are going to be using the $81 level, 50-cent level in coupled with this bearish trend line to continue to guide our selling momentum. So how do we want to be using this structure to guide selling momentum going forward? Well, as we can see here, we already have a breakdown of a structure of the $81.50 level, and it appears price has done a retest of that structure, giving us a confirmation that we could be in the sell position at this point. Now, if a further breakdown of the $81.20 level happens, this will be welcoming an additional position to our existing trade here on the US oil for today. So as long as price remains below the $81.50 level or this bearish trend line that we identified here, we will continue to remain comfortable in our sell position, and we look out for selling opportunities, look out for selling structures. It could be trend continuation patterns following this impulsive move. For instance, now we have this impulsive move to the downside of adding more position to our existing trade. So for the US oil, like I said, we'll continue to look out for selling opportunities below this trend line and the $81.50 level. Now, with that being said here, we should also take into consideration if bullish momentum comes in here. So for us to buy the US oil, we would not be thinking of any buy position except price action takes out all the sell position that we have been witnessing around the $81.80 level in the last 12 hours. As you can see, since the breakdown of that structure, sellers that continue to respect that level continue to negate all bullish momentum from that structure. So if at any point in time price breaks out of the $81.80 level, and if you look closely into the structure, you can see how that level shares a beautiful confluence with that bearish trend line. So if price action takes us out of these sell positions here, gather some liquidity, and this will be reflected as buying pressure on our lower time frame around the $81.80 level or the trend line here, then we want to be thinking of buying the US oil, and we think of adding more position if price action breaks out of the $82.60 level going forward. So these are our views here on the US oil for today. It's quite a simple setup to use as a yardstick for trading activity. So let me replay what I explained earlier. So the first structure we are going to be using is the bearish trend line, which we are expecting which we're expecting to guide bearish momentum here. And if price action breaks out of that structure, then it's a sign that the trend line is no longer strong enough to hold selling momentum. Then we'll continue to look out for buying opportunity. That is if price breaks out of that level. Now, the other structure we want to be using to guide our trading activity for today is the $81.50 level. As you can see, this level had been a strong buying niche before the breakdown happened an hour ago, and we expect that a retest of that structure with selling pressure below that level will continue to give us selling opportunities going forward. So these are the simple setups we are going to be using to guide our trading activity for today. If you have any questions, feel free to drop your inquiries in the comment section, and I will be taking time to read through the comment section to see if there are any inquiries in that regard.